Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, Vineeta Sharma of Narnolia Financial Advisors and independent investment advisor Sharmila Joshi join us on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss stocks like Eicher Motors, what happened with the financial. We'll discuss Page Industries, the valuations and the results. VIP Industries is trading at record highs. What's the way ahead? And we asked them about MNC stock, and MNC pack, especially the pharma pack, has been doing very well. We'll ask them any stock in the MNC pack that they like at this point of time. But we'll start with the first one, and that is Eicher Motors. Came out with numbers yesterday after market hours. Inline set of numbers, the count was up almost 4%, even though some concerns are there regarding slowing down of sales or whether demand will happen. But what's the view ahead? What's the valuation like? We'll ask our guests. So, Sharmila, I'll start with you. What did you make of Eicher Motors numbers?
I think numbers were very good, and precisely I think, as you said, the concern is really more on the fact that, you know, up until a point that you saw that even if two-wheeler volumes for the market were lower, you always got very good volumes from Eicher for their product, because it was a niche product, and also margins there were very good. But there is, I think, you know, some amount of concern now that, you know, given the fact that they've been around so long and so many people have bought Royal Enfields over the years, you could actually see their volumes getting in line with what is happening with the rest of the market. So I think the concern is more on that than the actual numbers, and therefore, you know, you are sort of now beginning to doubt whether it deserves the kind of premium valuation that it does. So I am cautiously optimistic given all this sort of scenario. Perhaps I can sort of expand on it a little. Why I am optimistic, I can expand on it a little later. But I think in general the numbers were in line, and I can completely understand, you know, why the concerns are there. Because, you know, at the end of the day, it is a premium product, and you do wonder whether now margins as well as volumes will sort of fall in line with what's happening with the rest of the market.
Okay, and Vineeta, what did you all make of the numbers?
Yeah, Darshan, the sales grew by 27%, and the margins have also kept up. If you go by other automotive sector, the kind of results that they have given, most of them have lost on the margins. And Eicher has kept up and it has declared margins much above the later quarter. So overall the results have been good. The concern that we find is obviously, as you said, the volume growth, because in July month also, if you look at the two-wheeler sales for July, year-on-year growth was 6%. Export and VECV is doing very well. VECV, it's recording around 50% plus top line volume number as well as top line. So we are also cautiously optimistic on Eicher Motor.
Okay, so that's the view, cautiously optimistic by both our guests. Do you all have it under official coverage?
Yeah,
what's the recommendation that you all give your clients after the numbers?
Right now also we have an accumulate rating on Eicher, because it's already fallen from highs, and amongst the auto space it's still at you know, around 31,000 price to 31,000 target can be thought for Eicher Motor. We are, however, we are not going very aggressive with Eicher Motor, but since we have to have something very nice in auto space, we have Eicher.
In the two-wheelers, what are you pushing your clients?
Eicher as well as Bajaj Auto, considering the recent whatever guidance the management has given, we are liking Bajaj Auto. Management has changed the strategy. They are now going for market share gain instead of, you know, margin, because earlier management was very concerned about the margins to maintain the high margins, and given the rural growth that is coming in, Bajaj has changed its strategy, and it is targeting for some 5-7% market share from others. So that's a strategy.
Eicher and Bajaj Auto is something that Vineeta is saying. Very quickly, you said that you had some points that why you are cautiously optimistic.
So, you know, I think two things. One is that you know, when we talk of Eicher, we are really looking at it more as the Royal Enfield story than the CV part. When you are giving it that premium valuation, you're giving it for that business. So that is, you know, one thing very clear that market views it as a Royal Enfield story. I think these murmurs about their volumes speaking out, etc., have been there for some time now.
Okay.
It's been about a year and a half since I've been hearing these things that their volumes could be peaking out. It still hasn't happened. So I think that we are still that way an aspirational sort of a society, and I think that there are large parts of the country where you will still see good demand for Royal Enfield. Number two, I think the management has also somewhere realized that these concerns are there. So they have also been sort of branching out and looking at export as an option, and they have also been exploring geographies in other countries which have demographics very similar to India, but that story is still to play out. So let's not look at it in terms of valuations, keeping that in mind, because that's why the optimism is there, but it's cautious because you haven't seen it really result in any great numbers. And very honestly, I've really traveled the length and breadth of the Himalayas, and the only motorcycle I've seen everywhere is Royal Enfield.
Okay.
So that gives me a huge positive as far as Eicher is concerned. So in fact, my target is even higher than, though I don't have like an official coverage, I would still think that the target would be in the range of 35 to 37,000.
Okay, so extremely positive view that's coming in on Eicher Motors. Still substantial upside as per our guest. The next stock we want to talk about is another counter which again keeps on performing, which again keeps on moving, and the valuations just keep on getting higher and higher. Page Industries. Now Page Industries came out with numbers which were in line with estimates. The counter is down almost 2%, but remember yesterday it hit its fresh lifetime high in trade. Trading about the 31,000 mark in trade. What should one do with Page Industries? It's managed to double in the past 1 year. So Vineeta, what did you all make of Page Industries, and what are you recommending clients on the same?
Page Industries, we were earlier buy on decline, but right now, considering the yesterday's price, we have come out with a neutral report on it, and the price target is around 31,000. If we look at the annual report, things were very nice in the sense, if the business model is concerned, the inventory turnover, which has been a little bit of a worry, but that has reduced in the current financial year for FY18. The management has done more outsourcing, and they're planning right now like 20% was outsourcing, so they're managing around 40% outsourcing going forward. Also from EBOs that they're planning. So earlier what was happening, they were having 100 EBOs per year. So this time they are increasing the EBO target. Overall volume should be there. Let's see how the valuation, because it's really one concern with.
Okay, so valuation is a concern, not the numbers, according to Vineeta. And Sharmila, what did you make of Page Industries numbers?
Yes, absolutely. I completely agree with Vineeta. I think for me, valuation is the concern, because the numbers were completely, really great numbers, I would say. If you're talking of a 46% increase in profit, and if you look at the way they perform quarter on quarter, you will see they've really managed to keep that, that momentum going as far as that increase in profitability is concerned. Then, the brand that they have, Jockey, they've continued. I think in the last quarter there was the news that they have continued, their agreement has been sort of refreshed. So, that is also going in their favor. We are, and again, coming back to that aspiration of this, so you are seeing more and more people wanting to own brands. So there is definitely scope for Page to grow their, whether it's Jockey or any other brands that they have going forward. And you're already getting a premium valuation. The question that is in my mind is that how much more of a premium valuation can you give it? So I think the stock needs to consolidate at this level before you can really consider what to do with it. I think what you have, you hold, but I would really stop short of putting a buy on the stock.
Okay, so I think another cautious view that's coming in on Page Industries mainly on account of valuation, but Page has always been expensive. Even at 10,000 you said it was expensive, at 20,000 you say expensive, even at 30,000 people are saying it's very expensive. It's delivering, it's giving you 20%, 25% return. So is that not something that you would consider?
So absolutely, I think that is why one hesitates to put a sell on it. And you say hold what you have. But the point is that when you say that a stock deserves to get premium valuation, that premium valuation cannot go to more than twice of what the rest of the brands are getting. I think it's almost there.
Yes.
It's getting in terms of valuation, it is twice of what the rest of the people in this pack are doing. So which is why I feel, the stock needs to consolidate. That's about all. There is absolutely no negative comment to make on their earnings, their quality of earnings, the brands that they have. Absolutely no negative comment there.
Okay, Vineeta, you all have official coverage on it. At what level would you be probably interested in, again, recommending your clients to start accumulating Page Industries?
Yeah, that's a very good question, because it's difficult to have that price considering the kind of volume growth Page has done. Recently there has been some some lower volume growth for the company, which the management has kept up by price increases. So overall, on the face of it, you get good sales. But management recently, if you look at it, they have appointed Varun Berry as their independent director, and that that makes me very excited, because Varun Berry is one person who has been known for taking Britannia margin from lower single digits to higher double digits, and management is also consolidating. They are thinking of changes in the distribution channels. So volume growth that has been lost, I feel that should come back, and if that comes back in period, if there is a consolidation in the share prices, I think one should get into it.
Okay, so that's the view that's coming in on Page Industries at this point of time. Let's move on to the next stock, and that is VIP Industries, trading close to record highs. Let's see what the counter is doing today. It's down 5%, but nevertheless it's come in the ASM framework. But nevertheless, the counter is doing extremely well for itself. Yesterday it was trading at record highs. So we'll ask our guest, Vineeta, any view on VIP Industries? Do you have this under coverage?
We don't have it under full coverage. We have a soft coverage on it, and VIP sales over the last 4 years have grown by 1.5 times, and profits have grown by 4 times. So numbers they are delivering. Currently, the margins, if you look at from the beginning, from 5, they are reporting higher margins quarter after quarter, year after year, and this time the margins is mainly higher because of the Chinese currency, which has depreciated much more than Indian currency. So most of the soft luggage that they have, 50% of the sales are outsourced through China. So that is one advantage that they have got during this period also, and might continue for a little more period of time. But then overall we are little neutral on the stock.
Okay, slightly neutral on the stock. And Sharmila, you on VIP Industries?
So I think this stock, one of the reasons why it sort of came into limelight this last week is it's sort of beaten the ASM, that sword that was hanging on every stock, that if you come into ASM, then it's just downward circuit for you, and this was a stock that sort of belied that. But yes, I think numbers are good. Again, I think in terms of valuations, they are slightly on the higher side, as my comfort level goes. But I think yes, this rally can continue, because clearly markets are liking the consumption stories.
Okay.
So given that, and given the fact that we are beginning to see momentum stocks sort of begin to do well, and large caps seem to be taking a bit of a meaning the top 100 stocks seem to be taking a bit of a breather, I think there are chances that this rally can continue, but I am little uncomfortable as far as valuations are.
Okay, so mainly neutral ratings coming in, and since we are running out of time, we'll quickly try to get in the fourth stock now. And off late MNC companies have been doing well, especially in the pharma space. Siemens came out with good numbers in the capital goods space, so there is a little bit of traction that's seen in the MNC space. So we are asking our guest any MNC stock that they like in the entire portfolio, and there are lots of stocks, MNC stocks here. So Sharmila, I'll start with you. Any MNC that you like?
Yeah, so we missed you last Friday when we discussed the MNC pharma stock. So that was the time when I looked at this stock. Merck is the stock I'm talking of. You've seen a very good jump in terms of profits this quarter, and as I said earlier, we are seeing some kind of a momentum return to certain stocks. I would put VIP in that list. I would definitely put Merck in that list. So yes, good results on the back of good operating income, decent valuations, not like really cheap valuations, but decent valuations. And I think this is the stock that I recommend with
Okay, Merck. And what about you, Vineeta? Any stock that you like in the MNC space?
I will not be able to recommend in a pharma space though.
No, it's open to any MNC.
And since most of the stocks are illiquid, so I have one share in MNC. Normally I like HUL, but given the run up, I will not be able to recommend that on a public platform. And one can start accumulating Colgate-Palmolive at this level, because one main concern that Colgate had was the volume growth slowing down, and given the competition from Patanjali or other players also, volume growth had missed. Recently, the company has launched a natural product, which is Ved Shakti, and that was launched in the southern part of India. And that has picked up well. It is right now 4% of the total sales of the company, and management is expecting a double-digit percentage of sales from the product. So volume growth, I feel I was getting some other news also, like Patanjali has not been able to, have incremental sales from the toothpaste the way it was having. I also look at Dabur, how well it has caught up on the honey thing from Patanjali. It has got back its market share. So that keeps me enthusiastic regarding Colgate. Also, so volume growth, I'm little getting comfortable. Also on the margin, management has played very good strategies, and right now they are on to higher EBITDA margin spree again. So if volume growth comes in and EBITDA margin is maintained, I think it can give 1260 sort of target we have for Colgate.
Okay, so bullish calls coming in on the MNC stock, Colgate as well as Merck, that's been spoken about, but we completely timed out on today's Hot Money. We'll have to wrap it up here. Sharmila, thank you so much for coming. Vineeta, thank you so much for coming on the show. Ask BQ comes up next. Stay tuned to Bloomberg.